Hey everyone, thanks for joining. Of course, back with Randall. We're gonna do a fun video today. Of course, we're gonna be talking about where Phunware is gonna spend some money. Raising about $25 million. So a healthy amount to say the least. But first things first, Randall, how are you?
I'm doing great. I missed you. It's been a while, so I know you got a chance to talk to Alan, which I'm glad. It's amazing being a part of this company with him and the rest of our employees, and so we want to get as many of them, in front of you and in front of the world as possible. Because look, whether you're investing, institutionally or investing retail, you want to know the management team because they're going to be the ones, deploying the capital. So you got to understand what makes them tick, and are they somebody that you can follow? And I think that we're someone that you can follow.
Yeah, I'm sure people missed the energy that you carry, which is fantastic.
Me? I'm an introvert, Jay. Don't you know? Listen, I get shy.
Don't lie to
You're making me blush. You're making me blush.
Okay, I want to say, I know you're based in Texas. I know so is the team.
Yeah.
Everything okay?
Thank you. No, I mean, it really is. You know what's neat, and we had this happen when the hurricanes hit Houston, but we see it all over the country. It's really exciting to see people come together. So think about what's going on right now. What happened last week in Texas, no power, you can't drive, no water. And, a lot of the stores ended up having, runs on all the food. And what you ended up seeing is people coming together, people that, were still on good grids, inviting people into their homes, inviting sometimes strangers into their homes. There were situations where drivers like, Uber drivers or, Uber Eats drivers got caught at someone's house, like delivering, and they couldn't get out. And so they just stayed there for a couple of days until they could get out. And, they welcomed them in and said, hey, you can just stay here until it's safe. But then what really was exciting that we saw, all of these restaurants who have just been, crushed over the last year, they started just giving away free food. They're like, if you can make it here safely, we have 600 free meals for the first people who could get it. And so a lot of people, just kind of came together as a community, and it was really exciting to see that. I mean, it's sad that a lot of people, there were people that lost their lives. And so, it's something to remember that, these are things we need to address going forward. But from a humanitarian standpoint, it made us stronger as a community. So thank you for asking.
Yeah, no, hey, good, great outlook, and glad you're okay and your family's okay. But here,
thank you.
Some more fun stuff. Emphasis on fun. $25 million. So Randall, tell me, and so many questions. Where are you spending it? This is going to be great. I don't even know what Randall's going to buy, but I'm sure he's going to buy something. So here, I got to listen. What's on your guys' shopping list?
Well, I think so. One, it's certainly not me. It's always us. It's always we. We are a team. We are a family with a PH. You got to remember the history. I know we talked about this, but for people that might be watching this video for the first time, Phunware has raised a lot of money over the years, and this is pretty common. Like, this isn't something that, we've done uniquely. Every company raises money in some form or fashion through debt or equity in order to scale. And so you always want to be generating revenue, and you always want to grow organically. But these are infusions of capital, so you can move faster, you can build more value, you can do more things. But since we've gone public, one thing that a lot of people don't realize about raising money is sometimes it's relationships. It's not just what you spend the money on, it's who's giving you the money. And why that's important is you just need friends in the prison yard, right? As companies out here in the crazy world, we're trying not to get shanked in the prison yard, and so you need some friends, you need some buddies, and arguably a lot of very dialed in, respected investment banking teams and institutional investors provide an incredible amount of market support. And so what do we really want? We want people to invest, have long-term positions in Phunware, hold and accumulate over time. And so by selling, a larger chunk of Phunware to an institutional investor with that mindset, that's what we're actually doing. It's actually creating more value for shareholders, because those are shares that arguably aren't going to be traded, or day traders aren't going to be flipping them. You know, a lot of these institutions are trying to build out large positions. They're trying to make orders of magnitude returns on their money. They don't get out of bed for an 8% return. And so what we're trying to do is find those very strong relationships, because we haven't had them. You know, when we went public, we didn't even have a banker take us public. And as you know, we didn't take any money going public. So we did SPACs before SPACs were cool. Now with Chamath and everything else, like, you know, everybody wants to do a SPAC and merge with a SPAC. Well, we did it and nobody really knew what it was. We didn't get any money. We didn't have a banker, and we haven't really raised much money since. So this is an opportunity for us to mature as a company. It's a chance for us to build some really deep relationships. And for those retail investors that don't understand this, the way we get our name out there into the market, the way we get more institutional long-term buying, which sends the price up, we've got to go to the right conferences with the right investment bankers. We've got to go to, you know, we've got to get in front of the right institutional investors, family offices, fund managers who are going to invest and then hold. We've got to get our market cap up until we start getting on some of these indexes, like the Russell Index, which reconstitutes in May. And so a lot of these things all play hand in hand. So we've got, you know, not just one investment banking team on our side, we got two. We have Roth Capital and Northland, which are two very well-known, very storied, very respected banking teams, and couldn't be more happy working with both of them. And we got to talk to a bunch of other banking teams that we were evaluating as well. And so by bringing them together, now we have access to what's called research coverage. So they have analysts that work for those funds, and they cover companies. Now, there's always a separation of church and state between the research team and kind of the equity teams, but more often than not, as you begin to build these relationships with some of these investment banking teams, you start to get, you know, being picked up with coverage. So we've been picked up with coverage by Taglich before, Ascendiant. And so now as we grow, we hope to get, you know, level up even higher as some of these larger banking institutions begin to cover Phunware. And then that's what a lot of other institutional investors look for. They look for that as like a seal of approval, as like an indicator of, hey, wait, this is a company to look out for, and here's a third party doing their own due diligence, taking their own time to really think about what a price target would be. Now I'll pay attention. So it's all part of our investment relations strategy.
In some cases,
you hit the nail on the head. And so it's not just about getting money to spend. It's about building the right relationships with the right people who can open the right doors to long-term institutional buying. And that's what really builds value in a company. Because look, and we understand this. A lot of retail trading, you know, we obviously can't, you know, talk about it without talking about GameStop, you know, crazy what happened with that. But that's a flash in the pan, right? And I don't want to be a meme stock. I don't want to be a flash in the pan. You know, we're a transformational company doing transformational things, and I truly believe we'll do for mobile engagement what Amazon did for cloud storage, or what Salesforce did for CRM. And so I want people to learn our story, build out a position, and hold. And I want them to hold over time so that they get 10x their money, not 10% on their money. But a lot of retail investors do end up day trading, and, you know, they kind of trade more frequently than an institutional investor would. So by getting institutional investors this $25 million round, and by having that be led by investment banking teams of the kind of capital, pun intended, of Roth and Northland, that's transformational for us. And so it's going in the step in the right direction, and understanding the ecosystem.
You know, what goes into, you say you were talking to a bunch of banking teams. Looking at it, I mean, give people some insight. Maybe I can think of some ways, but are you going through each person, like each bank's resume? Like, give me some insight here.
Yeah, that's actually a really good question. And I got to be careful because, you know, we're having all these conversations. Honestly, I didn't have a single conversation I didn't really enjoy. they're there to help. As much as we want to throw stones at, institutions, I love institutions. Institutions do make the world go round. I don't like short sellers. I think it's un-American, but there's a lot of economic theory around why short selling creates an efficient market and so forth and so on. And I won't belabor that point, but the institutional investors that we would be reaching out to and the institutional investment banking teams that we would be reaching out to, they're there to help. They want to give you the capital that you need to succeed. And so it's a great conversation to have, so because of the volume and liquidity in our stocks, so as retail investors look at stocks, they really need to understand that volume and liquidity matter. So you want to see price appreciation, but you also want volume and liquidity. So we were the top gainer on NASDAQ in volume and percentage increase multiple times. And so that gets a lot of people's attention because they're like, hey, wait a minute, there's a lot of eyeballs on this company and this stock can move fast when it moves. And so that gets people's attention. So obviously, bankers start to pay attention. If you top out on the top of, NASDAQ's top gainer list, bankers start calling going, hey, so what do you need?
Hey, Randall, how are you?
Buddy, hey, buddy, me and you are friends, right? And the reality is, unfortunately, a lot of people are late to the game. So, for us, I used to do this when I was doing venture investing, and I used to tell entrepreneurs, you have an N of one. Like, you are only worried about your company. I'm seeing hundreds of companies. And so I see different pitches, different styles, different things. And so I have the benefit of that large data set, right? Well, it's kind of the same thing in terms of this, where I had certain investment banking teams that have been talking to me for months. Like, they were talking to me before we were cool. And so that means something to me. You didn't just come knocking once you realized we were doing something. You put in the time to build a relationship with me when you didn't really know where we were going to go. You learned our story. You introduced me to your analyst even before we agreed to do a deal with you. Those kind of things, those are indicative of how you're going to treat me as a relationship, as a partner. You're not looking at Phunware like a deal where you're just going to carve off some fees. You're really looking at, how can I bring the full weight of my firm behind Phunware to support you and make you succeed? And Roth and Northland obviously, checked that box in a big way for us. But there were multiple other ones that checked it. Some of the ones that we ended up not going with, that we could have gone with, are actually just, maybe those are kind of longer term things. There's some banks that, I'm not saying we talk to them, but, the Goldman Sachs of the world, this would be a small deal for them. They don't get out of bed for a deal like that. But, 5 years from now, I hope we're doing, a multi-billion-dollar transaction like Tesla is doing. And then we'll have, other banks. And so you want to find the right bank for the right phase of your growth. So where we're at right now, really kind of growing back out of some of the pain we've been through the last 2 years, becoming a really good small, no longer micro cap, growing into small cap, growing from there. I think Roth and Northland are just amazing partners. We couldn't be happier having selected them, but we could have selected any number of a couple other ones that we were talking with as well, and I'm sure they would have done an amazing job also.
Yeah. No, cool. Well, hey, good insight to kind of, no one really knows unless you run a, $100 million company on the NASDAQ, what goes into picking a bank. So some good insight. Now I'd love to hear, and I know a lot of questions even before I even put together kind of let's do this video. People are saying, oh, I wonder what they're going to spend money on. Any ideas? Can we get some structure? I don't know. I don't know what you can and can't say. So obviously I'll throw it to you. Maybe you can generalize a little.
Yeah. I probably say too much, but you know what? I mean, I think me and Alan, we both feel, barring anything that there's a regulatory issue, we want to try to tell people as much about what we're doing as possible. I think you need to be able to trust the people you're working with. You need to be as transparent as possible about what you feel concerned about and where you feel the strengths are. And so, one of the things that concerned the hell out of me for the longest time at Phunware if there's always metrics, like things institutional investors do really well that I think retail investors should really start thinking about. Is there's all these numbers and ratios, whether it's a current ratio and EPS and things like that. Though there's another metric called LTV to CAC, so kind of lifetime value to customer acquisition cost, and it kind of tells you how much you're spending on sales and marketing. And so at one point, we were at like 9-to-1, which is just absurd. It just means that we were not spending enough money on sales and marketing, and so our target LTV to CAC is kind of 4-to-1, and but it made sense because we spent so much time and money building the platform that we have to do what we do. I think you remember in our last call, I kind of said the reason why you don't see flying cars is it's super easy to have CGI, put a flying car in a movie. It's a totally different thing to actually build that and do that in the real world. Well, it's the same for what we're doing for localizing and personalizing engagement and being able to do that. And so it took a lot of time and money. We had to spend a lot of money on engineering and technology and just getting this thing built. And it really wasn't ready to sell at scale, which is why I was so proud of all the money we did have from like Fox and some of the one-offs that we were doing, because our platform was still being built. Well, heading into 2020, really our platform is commercial grade now. It's ready to go. And so we need to spend more on sales and marketing in order to get that platform into the right conversations with the right companies that allow us to really take advantage of that hockey stick growth. And so the primary use of funds is sales and marketing. And quite frankly, that's what you want to hear. Like, there's no tech debt. I don't need to go build one more feature. It's like, if I could just
spending money on making money, that's a good thing.
Exactly. And the beauty of it is I get orders of magnitude off of that. It's not like I've identified that one sales rep can sell 10 vacuum cleaners, and I'm only going to sell 20 vacuum cleaners if I hire 2 sales reps. I'm hiring people who understand how to, basically scale through channel. So, right, whether it's a partner referred selling where we're selling together, or it's a true channel where we're educating them on how to sell standalone by themselves and we're just supporting. Either way, every time I hire somebody, train them, and get them going, there's orders of magnitude more impact they could have on our revenue. And so our entire strategy right now is really focused around those partner and partner referred selling or pure indirect channel selling. And so the people I'm hiring are meant to push that. They're not just meant to sell ends of one and then just rinse and repeat, because I don't want to have a big direct sales force. So a lot of sales and marketing effort around that. I would be remiss, we've said this in our guidance in the past, and this is something that I think a lot of retail investors don't understand innately. You can grow kind of 2 ways. You can grow organically, and you can grow inorganically. And so there are companies out there that are doing $20-30 million of revenue. They're at break even or profitable, and for a variety of reasons we don't have to go into in this call, that you can acquire for 7 figures. And so you start thinking about reporting as a public company. If all of a sudden you're like, hey, I thought you were doing this revenue, and it's like, wait, you acquired this company and now you're doing this revenue. Yep. Like that's a totally different framework. Banks look at you differently. Your market cap obviously responds to it. And so, we're always evaluating that. And a lot of that is only as it matters accretively to your strategy, right? So, things that are naturally what we're trying to sell anyways, whether it's location technology or certain ways to spread mobile engagement throughout our ecosystem, or people with certain access to certain customers or a user base. So a lot of things, I think, organically, sales and marketing, evaluating opportunities inorganically that allow us to grow bigger, faster, stronger, are key use of proceeds right now. So it's really exciting for us.
No, I already see questions coming. We're gonna have to do another video, Q&A video, but also you talked acquisition, you talked marketing, so we can definitely do kind of marketing, sales strategy, and do kind of a deeper dive because I know people will be interested. But hey, those are some great areas. You mentioned acquisitions, so of course could do a deeper dive into some interesting acquisitions that could happen. But no, I think that was an amazing answer, and really, I know just the tip of the iceberg, the tip of the iceberg. But I know we'll get some great questions. We can probably dive a little deeper. But to me, if I wasn't, or if I was just a normal investor in Phunware, and I heard they're going to spend money on making more money, music to my ears. So fantastic, happy to hear that. So again, congratulations on getting this done. I know doing financings are not a small order, so good for you. Yeah. Anything else you wanted to say about it? And of course, we'll probably do a Q&A video coming up here soon.
No, I mean, I think, I'd probably just say thank you. I think, wanting to educate folks, whether they're institutional or retail, I think these videos are such a great forum to do that. And we would encourage people to, use some of the videos that you're putting out to reach out to you, ask questions. I still want to do an open forum, like a town hall with maybe some retail investors that want to participate. And we don't even have to prep for it. Let's riff, let's talk about it. Let's see what's going on. I mean, I want to bring people as much into our world as possible. Because if you're going to be a shareholder, you need to know what we're doing and why we're doing it. And a lot of people will think of, fundraising as a negative, like, oh my God, they're diluting shareholders. And that's entirely the wrong way to think about this kind of stuff. Every company does it. Every company does, registered direct offerings like that. Every company has what's called at-the-market offerings, usually in parallel, so they can take advantage of opportunistic moves in the stock price. And all of it is really just, figuring out, is the company a good steward of the capital being raised? And quite frankly, if you don't think they are, you shouldn't even be following the stock anyways. And so I always, jokingly, I've gotten off all the message boards, for the most part, just because sadly, there's a lot of people who have, ulterior motives, and some of them are kind of nefarious in terms of just bashing stock for the sake of bashing stock. Because you think, what person in their right mind would sit in a forum that doesn't want to invest in a company only to bash the company? Well, they probably have a short position. So they're making money off of what they're trying to do. Everybody has an agenda. The reality is every company that is doing something well will want to grow faster. And the way you grow faster is adding fuel to the fire. So either, bringing in institutional investors through a registered direct offering like we did, having an at-the-market offering available to be opportunistic, growing organically, growing inorganically. There's no world in which, there's not a certain level of dilution. What you're arguing for is you're maximizing shareholder value, that by bringing more people into the company, getting more eyeballs on the company, getting more research coverage, acquiring other companies, investing in sales and marketing, all of that is driving shareholder value. And that's why I'm here. My job, full stop, is to maximize shareholder value. That's what it is. And that's what I'm going to do. And we're going to knock it out of the park.
Yeah, no, you're crushing it, and thanks for doing these videos. I know some people have shared that feedback. I'm not sure how much makes it back to you, but a lot of people do love them. So obviously, thanks for taking the time. And I think doing a Q&A coming up here would be awesome. So I invite anyone who has made it this far to drop any questions below. We'll start to collect some, and definitely can do kind of an open forum like style, or just do a Q&A video. We'll see if it works, or both. Who knows? But Randall, it was awesome. Thanks for joining. We'll do some more fun videos coming in the next couple of weeks.
Thanks, Jason. I appreciate it. Looking forward to it.